Rocky Lalvani. Welcome to the Wealthy Wealthy podcast.
Thank you so much for having me, Christina. Excited to be here with you today.
Yeah, I'm so excited to have our conversation. We were introduced through our mutual friend, Erin, and she said, "Oh my gosh, Christina, you have to meet Rocky. You two just speak the same language. You guys seem to be cut from the same cloth." I'm like, absolutely. And then we met, and exactly, she was exactly right. So big shout out to Erin Field for the introduction.
And we read the same books.
We read the same books, and that's a lot of books. It's funny. I mean, you have right there Profit First, which we're going to talk a lot about that today. And then you have The Road Less Stupid. And Keith Cunningham is one of my mentors. I've attended so many of his workshops in Austin, and I really attribute him to being one that's really helped me think the way I think. And maybe we start off here is that he talks a lot about thinking time. And it was funny why that was such a big concept when I heard it for the first time. And now I live by thinking time of I dedicate this time every week to just think, just look into space and think through things. And it feels like my meditation. It almost feels unproductive in a way, but knowing how beneficial it is.
It is actually super productive. As a matter of fact, I read somewhere if a business owner, if they just spend 15 minutes a week on thinking time, it will dramatically improve their performance because most of them are running around putting out fires all day long. They're not really doing the strategic work. And if you're the CEO of the company, the owner, your job is strategic work. You need to be thinking.
And we're going to talk about strategy today because I think a lot of those that are getting into the entrepreneurial world or even consider them an entrepreneur, they don't even really know what strategy means. And business is all strategy. Successful business is all strategy. So I want to dig into your perspective on that. Before we get started, I'd love my audience to learn about you. And I like to go back to the earliest day that you want to remember and share, kind of the beginning point that you said, yeah, it was kind of at this moment that if I think all the way back, I'm here where I am today because of this event or this mindset or this experience that shaped me. Anything that comes to mind?
A whole ton. We could spend the whole hour on that. It's funny. Looking backward, it is so easy to connect the dots. But looking forward, I would have, there were hints of this, but I didn't know how it would play out. So I think one of the earliest things is I'm an immigrant to America. So when my parents came here, they were essentially starting over. But the one thing that was different, and there were two things I think that actually stood out that I didn't realize till much later in life. One, money was a conversation that happened at home, and it was a conversation that happened with their friends. Everybody would talk about money and they were blunt about money in the sense of if you bought a new car, people would be like, well, how much did you pay for it? Right. So that was the kind of conversations that occurred. The second thing is, even though we were immigrants, even though everyone was kind of starting over, the expectation was success. Like you are expected to succeed. You are expected to follow this path. It's not even like a choice. It's just, this is what's going to happen. And so when I was a young kid, I got to see, the lower end of the income spectrum, and I got to see a very high end of the income spectrum. And I wanted to be wealthy, and I wasn't afraid to work. So I was always trying to figure out how to make a buck. The classic paper route, the different jobs that you get. But the other thing is, I used to live close to New York City. And so I would go into New York City and I would buy things wholesale and I bring them back and I mark them up 100% and sell them at school. So I was selling stuff 5, 10, $15. Now we're back in the 80s. So, if I sell something for 20 bucks and I make, I mean, in other words, I buy it for 20 and I sell it for 40, I got 20 bucks in my pocket, which back then was pretty big. And so I was always living large, and making money as a kid. And then I took all that money and I went and bought the first Apple computer. I walked in with cash, right? 2 grand back then, which now they're even cheaper, which is kind of funny. But one of the first programs I started playing with was VisiCalc, and that was the first electronic spreadsheet. So I love spreadsheets. Like they tell me stories. I love organizing everything in spreadsheets. It doesn't matter what it is, whether it's numbers or plans or Thanksgiving dinner or the grocery list. Everything's got a spreadsheet that organizes and systematizes it. So when I got out of college, like I was always helping people both in high school and college with spreadsheets. And I got out of college and I thought, well, I could help people with spreadsheets. The problem is there was no internet. There were no podcasts. How do I sell this? Who do I even sell it to? And what is the value of this? Not a clue. And so I kind of followed what I was told to do, go to college, get a job. And I did well at work. And I made a lot of money and I built my wealth as a W-2 employee. But I also came to realize, oh my God, everyone's doing all this data in these big computers, but then everyone's dumping it into Excel to actually look at it. And even where I was working, I was dumping everything into Excel, reformatting everything so that I could get the actual answers I wanted. And then I had a major aha, which I just assumed business owners understood the business of business. And, Keith is very clear they don't. And Profit First is very clear they don't. And I was like, oh my God, like I love doing this. I can help. I understand the finances. I understand the taxes. I have an MBA. And here's a true problem. And now I know how to sell it. And so that's how we got to today.
Wow, what a great story. I want to dig into a couple things you said here. And you said you were in an immigrant, obviously immigrant family. Sounds like the community was also immigrants.
They were,
And
yes.
and so how do you, if you go back to like a mindset, if you were trying to label that as a mindset, how would you describe your mindset? Because again, it's very unusual that parents talk about money. It's an open topic. You talk about it with your neighbors. There's no shame or anything about that. It's just a normal, sounds like a normal conversation. Like, hey, what do you think of the weather? And oh, by the way, what'd you pay for your car?
So it wasn't the neighbors that we were having these conversations with. They were having the conversations with their friends who also had immigrated. So they'd get together once in a while. And it was in those situations that those conversations kind of took place. So again, it was just we were taught to be frugal. We were taught that you could live um, a wealthy lifestyle on a pauper's budget. Because at the beginning, we didn't have that, but we still were able to do those types of things. So I think it was just understanding that. The other thing is culturally, we negotiate. And so having negotiations was just part of life. I didn't realize any of this was different until like 30, 40 years later.
I love that. All right. So you and I talked when you and I first met, and we've had a couple conversations, just introduction conversations and learning more about each other's businesses. And we're talking about ideas for collaboration and all of that. And one thing that we talked about was personal finance. And what I took from our conversations regarding personal finance is that we believe the same thing, we do the same thing, we share the same thing, we built our wealth with the same mindset and skill set when it comes to personal finance. And yet it sounded like you wanted to try to teach people personal finance for a while. And it's interesting, again, you and I have had this conversation offline, so I just make everything I do public. What I think you said, correct me if I'm wrong, but you said, when I wanted to teach people money, I started personal finance, but nobody personally wants to invest in learning personal finance. So I moved to the business side. And the reason why that stood out to me is because that's what I do. I really focus on personal finance and help families build wealth. But again, it is a really heavy lifting, pushing a boulder up the hill to try to not convince, but for lack of better words, convince people how important that is, that I've considered going over the business side where it would be easier also. And I do have business programs like you, but share more of that story of what you discovered through your process and what you believe to be true about people and personal finance and lack of wealth creation as a result of lack of learning these different elements of money. So yeah, share your perspective on that.
So going back, I was always a money nerd, right? And I can go back and show you, I've been using Quicken for 30 something years, like back when it was on DOS and we upgraded through the DOS version. So I can run for you P&Ls and balance sheets for my personal finances, 30 years plus of data. And I just always was looking around. We all compare, right? I would always look and say, how many millionaires are there in the United States? And I was always shocked at how low the percentage was. But it was always interesting also to learn that Indians make up a disproportionate share of that because I think we were taught money. And so then after I built my wealth and I was like, I did this doing what I had to make money. It wasn't what I loved, but it gave me a good life. It's like, what do I really want to do? And through that search, it was like, you know what? You're really good with money. You can teach people how to get wealthy, how to do these types of things. The problem is, I can't teach you how to get wealthy this weekend. I can teach you how to get wealthy over 10 years. It's not that hard to build wealth, but it can't be done quickly. So I spent time, I got trained by Dave Ramsey's people and from him. And I came back from that and I was like, huh. And I realized he's dealing with broke people. And let's just face it, they're broke for a reason. A lot of it has to do with mindsets. And just in talking to other people in that space, I realized I can't make a living doing this. And it's a massive lift, as you talked about. So then I kind of went up market and said, there's people who make six figures and they're still struggling. Maybe I can work with them. And again, that same concept came back. Most people want to learn the get rich quick scheme, and they'll give you all their money to get them rich this weekend, which doesn't happen, right? That's a lottery mentality. And so it was really hard to make that shift of how do I do this in such a way and how do I help people build this? And again, I just didn't know how to get that messaging right. So I know other people are successful at it. It just kind of didn't work for me. And that's okay. But through that process, I started to learn business owners weren't looking at their numbers. I'm like, what are you talking about? This can't be real. I literally spent all this time talking to people trying to figure it out. And as part of that, someone introduced me to the book Profit First. And finally, I was like, okay, if this is for real, I know how to fix this. And business owners have to fix it, right? And we can make differences quickly because they're generating enough revenue. And if they're not holding on to it properly, we can make changes this weekend. Now, it's not going to make them wealthy this weekend, but it is going to make them cash flow. It is going to allow them to sleep. It's going to allow them to make payroll. It's going to allow them to make better decisions. So I could make an immediate impact, and the value was such that it made sense. And so that's where one day I said, I've had enough. I quit and I started a business, and the rest is history.
Yeah, thanks for that. And it's such a shame in a way because families need help with personal finance, and that's where wealth is created, is because your story is an example of that. You didn't get rich in your business by building this great big profitable business and 6, 7, 8 figures, all the hype out there. It sounds like you had a really nice W-2 job. You developed a really high skill and value, made a really great income, but you created your wealth to be able to jump into business as a result of how you managed your money and what you did with your money and your mindset about money. So I'd like to dig in that a little bit first, because I think your story and perspective is so important to be told, because I mean, I know I bump against this every day and see it, that I believe just like you do, that all the marketing out there to get rich quick by becoming an entrepreneur, or become a coach, or do this. Like they make it sound so easy, and people are putting six figures on a credit card to buy this get rich quick scheme that's about now entrepreneurship and be a coach and all the things. Like you make 10, 20, 30, 40, $100,000 a month that easily. And who doesn't want to sign up for that? And when you know the statistics like you and I do, you know that's just such a small number that ever gets anywhere close to some of these claim numbers. And so the reason why I want you to tell your story and why I like to tell mine is the same thing is we got rich. Yeah, I've been a business owner my whole life, but it wasn't my business made me rich. It was how I managed my money, both in my business, but most specifically personally, and what I did with that money that created the wealth, meaning asset income and passive income on that other side. So that's the story I'd like you to tell is it sounds like, if I hear you correctly, your family talked about money. There was no shame about money. It was expected that you were going to be successful and build wealth. And there was probably an example of that. And you could talk to your parents if you wanted to. But what did you do? So my first question is what did you study in college? What type of job did you get? And more or less, how much income did you start and end with during that tenure in corporate?
Before we go there, while I was doing this personal finance and learning, I was going to personal finance conferences where people were creating personal finance content. And so just learning through all of that, I got introduced to Russell Brunson. And, he's a guy who's his whole program is how to get you excited to buy his stuff today. And he would give out these awards for people that they hit seven figures in revenue or seven figures on a launch. But because I was in these groups, I was seeing behind the scenes, and these people were making seven figures in revenue. But the dirty joke was, but they spent seven figures and a dollar to do it. And so they actually were losing money, even though they had this massive amount of revenue. So what you see on the front is not what's truly happening on the back, right? People look wealthy. In reality, they don't have wealth. So this goes back to answering your question. When I got out of college, first of all, I didn't really enjoy college, but I had to go because I was told to. I got a Bachelor of Science in Economics. Um, they didn't teach me how to build wealth. Eventually, I went back for an MBA. They didn't teach me how to build wealth. The one thing that I did, and I started automating my savings, which is the reason I love Profit First. So I get out, I get my first job, and I wasn't making a ton of money because it was sales and it was, commission and so forth. But they had all these programs because it was a large corporation. So I signed up for the 401k because I knew that's what you did. They also had a credit union, so I signed up for the credit union. They had a stock purchase plan, so I signed up for the stock purchase plan. And then my dad handed me a brokerage account that he had for me from when I was a kid. And just so we're clear, I think there was $500 in it. Okay. So here's your account. And what they did was they allowed you to automate putting money into mutual funds. And so I started all of these things. Now, everyone thinks, oh, this is so much money. No, each of the mutual funds was $25 a month. Okay. This is teeny. I did a couple percent to the 401k. I did some money to all these things, but it was all tiny, tiny amounts. But what I had done was build the process of automating my money. I was paying myself first, right? We've all heard that concept. So the money was going aside first. And going back to the spreadsheets, I could sit down on the spreadsheet and say, if I save this much money every month for this many years with this interest rate, this is when you'll be a millionaire, right? So it was just simple math to me. And what I did, though, is every year, as I started to make more and more money, I would up those amounts little by little. It was never big. It was never tremendous. I didn't realize the power of that until probably 25 years later, when I'm learning personal finance and people are talking budgeting and people are talking spending and Starbucks coffee and avocado toast and all this crazy stuff, what really mattered was I was spending less than I made. I was automating that going aside, and then I was blowing the rest and having fun. And I don't care how you blow it, right? As long as you stay within that budget. Now, in the early years, there were a couple times where we screwed up. Early on, I started signing up. Oh, this is only $25 a month. Oh, that's only $50 a month. Next thing you know, my money was squeezed. It's like, oh, these automated payments of little amounts add up very quickly. Do not get into the trap of all these little things. And today it's worse than ever, $10 for this app, $12 for that, and Netflix and the cell phone and the kid. Like, it doesn't take long for that to be big. And so I learned that lesson, and that kind of stuck with me. And so I always paid cash for everything. As long as I stayed within my monthly spending limit, everything was fine. And if this month I got a little bit ahead of myself, in other words, I spent too much, I was like, uh-oh, I can't make that credit card bill. So I'd still pay it out of savings. But then the next month, it's like, we're not spending this month. We're going to keep it down till we get back in alignment. And so that was just kind of the balance. And honestly, well, this is a finance show, right? So let's talk about that. Do you know how much a dollar doubled for 31 days is?
Like $5 million.
It's actually a billion.
Oh, really?
Yeah. And because most people used to tell this story with a penny, but we have inflation now, so I can tell it with a dollar. So a dollar doubled for 31 days is $1 billion. But here's what people don't realize. And this is what I did realize. You know what happens if you wait till tomorrow?
Nothing. You lose money.
How much do you lose? Is it a
Double.
dollar? You lose half of the billion. So if you wait one day to take action, you lose $500 million. Wait 2 days and you're down to 250 million. Wait 3 days, you're down to just over $100 million. Now, $100 million is wonderful, but because you waited, from Friday to Monday, you lost $900 million because you didn't compound. Now, no one's going to double a dollar every day. I get that. But in my lifetime, I had multiple doubles of my money because I started early at the age of 22 saving, and it was guaranteed success.
You say so much in there, and thank you for sharing all that because, man, I can just dig into all the pieces, and these are all what I just call fundamentals. It's the fundamentals of money. It's the truth. It's the bedrock. It's the laws. And go ahead.
You know what fundamental starts with?
Oh, fund.
Fun.
Ah,
It's fun getting wealthy.
it is. I love
Do
that.
the fundamentals.
I love that. But so one thing that you said here that's really important, and I want to underscore it. And again, you're just sharing this as story, and there's so many like nuggets that you said in just this few minutes. And one is that there's a wealth principle that says that wealth is created in surplus. Wealth is created in the margin, and that's surplus. And surplus in money world is savings. It's the money that's you keep by spending less than you make. You spend less than you make, and you save the difference. And that's surplus, and that's that margin, the marginal difference between what you make and what you spend. But that's a wealth principle. You have to spend less than you make because wealth is created in the margin. And then, so we get that, and it's not a rocket science. It's not a rocket science concept to understand. We can all get that. A middle schooler can get it. Yet a teeny tiny of the population does it. So the follow-up to that is what you said was, I automated my savings. And that has to happen because if you're automated, if your savings, that surplus isn't automated, we're automatically going to spend it. But what you did is you kept yourself from spending it. So that's kind of point two here is automated my savings. But what I want to underscore is something else that you said was I automated my savings and I worked to not automate my payments. I paraphrase that a little bit. And that's what people do. They're automating their payments to keep Netflix and Spotify and ESPN and HBO and all those are 10, 15, $25 a month automated payouts. Those automated payouts are keeping those companies being billion-dollar companies, but we're not automating the payments to ourselves for ourselves. And that's the mistake. It's like, don't automate. They're automating the wrong automation. So anyway, it's just such an important, not just principle, but practice that clearly you learned early on.
It was, but I didn't realize that that's what it was. Like I just thought I was saving money and investing in the stock market and being wise. But when I looked back, I realized no, it was actually automating it that was the key because the automation kept running in good times and bad times. And regardless of whether I remembered, and because I was just used to living on what I had, like everyone else, I lived on what I had. So even as my income grew, we had more. And so we had lifestyle creep, but it was always constrained because our savings rate also grew. And so the savings just kept booming out and we never missed it because we never had it. And so we were happy. And this is what I tell people. People go, I don't have any extra money to save. I go, okay, you make $100,000 a year. Look across the street. Your neighbor makes 90. How is it that they're happy and they're surviving on 10 grand less than you? Like you have 10 grand that you can save. Whatever the numbers are, we can make them up. But the point is, somebody is living on less than you and is just as happy as you.
Yeah,
So
well
you just
said.
got to go make better choices.
Yeah, there's the third piece here that you said in telling your story, and that is what I call the management piece. This is the automation, but there's also the management, like looking at your money. And because you were tracking your money and looking at the numbers and tracking it and making sure you're staying on track, you were able to see like, oh, wow, we went beyond our spending limit last month and it was over by $1,000. So to stay on track, we're going to have to lower our spending by $2,000 next month to make up for that because we're going to stay true to pay ourselves first because we want to be able to retire rich one day, and hopefully long before 65. So what was and what even today, what is your practice for how often you're in your money, how you're managing it, and how you're looking at it?
So we've always continued to automate our savings all the way through. And it's just the way we do it. Now that I have a business, I use profit first. Profit first, the exact same principles. It takes the revenue that comes into your business and it automates money for taxes, money for pay, money for profit, and money for spending in the business. So it keeps your business constrained. So I do that in the business, I do that at home, and then we make investment choices, however we want to do, whether it's real estate, whether it's stocks and bonds, whether it's at times you have to reinvest in your business. But this is what's funny. We're investing in our business. Well, if you're going to invest in your business, shouldn't you expect a return? I don't invest in someone else's business and go, yeah, just keep the money. Maybe you'll give it to me. I expect it. I expect that money back, but then I expect a return. And I don't think most business owners, when they reinvest in their business, actually treat it as an investment and say, hey, if I'm going to put this money in the business, when am I going to get it back? How am I going to get it back? And what's the structure for doing that?
Absolutely. And we're gonna jump over the business side and go deeper on that in just a second. I have one final question on the personal side is clearly money was pretty easy and it sounds, I mean, you made your investments, you learned and you went to workshops and you read the books and it sounds like you're very curious and you followed these principles and it turned out for you because of course it would because the principles work.
It's just
Any,
simple math.
it's simple math, exactly. It's middle school algebra at the most difficult, math equations for becoming a millionaire and multimillionaire. How is your family? Did you guys have a family conversation about money? Did you share these with your kids? Was the wife on board? That is one thing for you to follow this, but how did you guys manage money and talk about money and treat money as a family?
So my wife and I talked about money before we got married. And then when we got married, we had a ton of debt from the marriage and combining households and all of that. So we literally spent our first year um, paying out all that debt, just being very tight that first year. My wife's a CPA, but the funny thing is she doesn't, she, she turns it all over to me. She's like, I trust you, but she also has full access to everything. So, her safety numbers are different. Like in the beginning, I'm like, um, how about I give you a budget? And she just refused. And she fought me. And here's the funny thing, without a budget, she actually spends less because we grew up with the same concepts. And so we were both on the same page money wise. As for the kids, um, growing up as an immigrant, you learn the stories. Like the first generation works hard, they propel the second generation. The second generation has tons of success. They spoil their kids because they don't want their kids to have to work hard, and then those kids blow it. So my kids are those kids that are supposed to blow it. I'm like, wait a minute, we're not playing this game. Okay. And so we were very intentional at a very young age, making sure that we taught them about money, that we had conversations about money, that we showed them the power of compounding and shopping and negotiating. And all of those same lessons we taught our kids. And we told our kids, your parents are rich, you're poor, you're going to have to figure this stuff out. And so we put pressure on them to have to think and make choices. And the other thing we did was we taught them not to be consumers. So, my friends' kids would look at them and go, what kind of sneakers are those? And they're like, I don't know. Because there were no brand names on them, because we weren't wasting money on all of that kind of stuff. So we were very intentional to be careful who they were surrounded by and what the lessons they were learning around them, as well as from us. And we gave them money as a young age. We taught them save, spend, charity, but we gave them money so that they would have an allowance every week and they could make these decisions. And then we would take them shopping and show them how to make decisions with their money. And you'd be shocked how quickly a 5, 6, 7 year old will learn about money. And there's another thing that they learn that there's a difference between their money and your money. And we said, no, no, you have money. You don't get our money. And so they had to learn to work within their money without the expectation of us always handing them something. Otherwise, kids are like, give me $20, give me 20 for this, 20 for that. No, that was never a conversation in our house. It was like, oh, you're going out and you're doing this. And if we chose to gift them money, then we chose to gift them money. But we always had, even down to lunch money. Hey, you can buy lunch at school. It's kind of whatever. How about you get 3 days of lunch at school and you take 2 days? You pick it out and you make your decisions. So kind of that constant back and forth.
Wow. That's amazing. You're just such a rare story where money's just been an open topic and an educational experience. And again, no emotionality over it. And you and your wife are on the same page and you sacrificed a lot at the beginning to have a lot at the end. And what a story.
It's funny though. I never realized that was rare. I just assumed that was normal.
Yeah, that is amazing. All right, because you have a sensibility about you. I didn't have that growing up, so I had to learn all these things the hard way by getting my ass kicked over and over and over again. But anyway, we wound up in the same place. So now let's move over to the business side. And the way I teach money to both entrepreneurs in their business and then entrepreneurs in their household, because I like to work with them on both sides. And when we can, like you said, we can build wealth through the household and we can build income through the business and build income fast if you know what to do in your business. But I teach the profit first system in both. Is that when I interviewed Mike on my podcast, for example, and he's going through his whole profit first system, I said, that's exactly what I teach for household finance. And the profit in household finance is what you invest over time for that 10, 20, 30 years to that becomes your freedom. But so managing it in the household, and I, like you, when I started doing this, I was just teaching entrepreneurs and household thinking that they had the money in their business figured out. And I came to the same conclusion, Rocky, that they're clueless. They're working their asses off. They're working to just focus on top line revenue. They're not managing their money. They're wasting money everywhere. They're putting all their money back into the business without tracking it. They're paying themselves as little as possible, banking on some future time there'll be a big payoff. And they do that for years and years and years, and they get burnout and just want to quit, basically. So it's funny, again, have the same journey and realization as you did. So let's talk about money and business. And what do you, from your perspective, and at the end of this, we're going to get into what you do and how you help business owners solve some of these problems. But what do you see as like the number one mistake that business owners or that these entrepreneurs calling themselves business owners are making? A majority, like the large majority.
So if you've had Mike on, Mike will tell you the statistics, and they are clear as day, I think, in general. 80% of plus of business owners aren't looking at their P&L. They're not looking at their balance sheet. And so that means that 4 out of 5 have no clue what's going on. They're looking at their bank account. Is there money I spend? If there's no money, I go sell or collect. Of the 20% that are left, 3/4 of them look at their P&L and they go, I don't understand what I'm supposed to do with this. How do I change it? What am I supposed to do? So they're looking and they see, but they don't know what to do with it, which means 5% of business owners really understand what's going on, which if you look at the 10-year success rate of businesses, it's about the same number. Surprising how that is. So that, I think, is one big problem. The second thing is, so let's, if you went to a football game, right, and you're sitting there, first of all, down on the field, there's lines. So you know where the 10-yard line is, you know where the goal post is, you know where the 50-yard line is. And then over on the side, there's a clock, and it tells you how much time is left, right? There are 4 quarters. Kind of surprising, kind of like business, 4 quarters. And then there's a scoreboard, and it tells you how everyone's doing. And yet, how many people would go watch the football game if none of that existed? I would guess that nobody would. I mean, as it is, everyone complains about youth sports when they don't have a scoreboard, right? And granted, no one's going to watch the NFL if there was no scoreboard. Well, now you're playing the game of life in your business. If you don't have a scoreboard, how do you know if you're doing well? How do you know if it's good or bad? And that's the biggest thing that I think is the next problem. Business owners just don't know how they're doing. They see money, they spend it. And this was my aha. It's like, oh my God, business owners are people. And they behave just like people who aren't business owners. They're bad with their finances and their mindsets are the same. And so they're making the same decisions. And I was like, wait, they went into business to do what they loved. And accounting wasn't on the list. And so that's why none of them are doing this. It's not their fault. It's just not their thing. And the other problem is, like I said, my wife's a CPA. Most CPAs that business owners talk to are tax people. Bookkeepers just know how to put transactions in places. None of them is really focused on how to have a growing and profitable business. So the people they're depending on don't even give them good advice because it's just not in their best interest. And here, but I'm an EA, by the way, so I'm an enrolled agent. I can do taxes. I hate doing taxes, but I love figuring out how not to pay taxes. Part of the reason I did that. That was part of another business idea that I was thinking of doing, found out I hated it. But here's the secret I learned being in those groups. Your tax person doesn't want you to pay taxes. They don't care if you spend money and can't cash flow. So they'll call you in November. Oh, I forgot to take out enough taxes, but that's not what they say. They go, hey, you need to buy a truck? You could save on taxes. So you go buy the truck. They give you a deduction. And come March, you're like, why is there no cash flow to pay my people? And so they're not even incentivized to do that. And part of the reason is if you said to them, or if they said to you, hey, you owe a bunch in taxes, what do? You scream at them, not the IRS. So they don't want to get screamed at. So they don't, it's training. It's just mindset and behaviors.
Yeah, I can't tell you, like, when I'm looking at clients' books and that type of thing, and I'm looking at some of their expenses, they say, well, my CPA told me to spend that, or I can write these things off. And in the same vein of what you're talking about, but a little bit different, is what I found where so many business owners overspend is they have this mentality like, oh, I can spend it because it's a tax write-off.
Mhm.
It's as though they're making money on the spending. It's like, no, maybe you're saving 20 cents on the dollar, but you're overspending on things that are not necessary or not needed for the business. And basically you're using your business as an ATM to fund your personal life because you want a new truck, but you can't pay your people and there's no cash flow. And you're wondering why you're working so hard and don't have any money. And you don't understand your books that, not running a cash flow statement that, hey, you thought you made a profit, but there's no cash. Where's the cash? And business owners are completely ignorant when it comes to the most basics of reading a profit and loss and understanding their balance sheet. And they're abdicating, like you said, to the bookkeepers and tax strategists, because like you said, is I don't want to do the accounting. I'm not smart enough to do the accounting. I'm a creative. I don't want to look at the books. So what do you think is the, um, what's the word I'm looking for? Like problem that this abdication, like what the cost, that's the word I'm looking for. What is the cost of business owners not looking at their books and abdicating it to their bookkeepers and tax CPAs?
Well, at the end of the day, then nobody's really looking at the books, right? Um, and even when you are profitable, like you go to, and we've had business owners who've had this situation, and this is the weirdest thing. I got to tell this profit first tax story, but you go to the tax person and they go, congratulations, you were profitable last year. You made X amount of money. And by the way, here's your tax bill. And so that prompts two questions. The first is, where is that money? In the CPAs just laugh and go, well, you spent it. And then the second question is, how the hell am I supposed to pay this tax bill? And then they freak out at tax time. The really cool thing and what I love about Profit First is and I do the same thing. I put money aside for taxes all the time. So we have a tax savings account because we have to pay the government. It's not our money. And I had one of the business owners who used Profit First. He had a blowout year. And so his sales were through the roof. But of course, the CPA is not having constant conversation throughout the year, adjusting the withholdings. The end of the year comes through, tax time rolls around, CPA doesn't call him for weeks. Finally, he gets the phone call. It's like, I've been dreading this conversation. Why? Well, you made a lot of money last year and you owe a lot in taxes. And he's like, yeah, I know. It was a banner year for taxes. He's like, how much do I owe? And she was like, it's about $100,000. And he said, okay, drop off checks tomorrow. And her jaw dropped. She's like, wait a minute. In my 20 plus years, nobody's ever said that to me. He was using the Profit First system. He told me, he goes, I had more than 100,000 in the tax account. I hear this constantly from business owners. They're like, yeah, tax time comes, I can stroke a check. Nobody likes paying taxes, but the confidence to sit there in front of your CPA and say, Yeah, I can stroke those checks. And then to go, oh, wait, there's an extra 20 grand. You know what that means? We get to pull that money out. We get to put it in our personal family wealth. We get to go celebrate. Maybe we have a little fun on, and we also save some of it. And so that's kind of what it comes down to.
Yeah, man, I just can talk about this forever. And the reason why is because I think what gets under my skin the most is exactly what you're talking about. Or, I mean, you said it best. You said people give all their money away to get rich fast. And that's in their business, the shiny penny. And let me, like you said, Brunson, who's like, hey, I can teach you how to have a 6-figure month, but he's not telling you it's good, it might cost you 6 figures to make that 6 figures. But all that gets celebrated is 6 figures. Then everybody's on the stage. Hey, I helped this entrepreneur do 6 figures, and I helped this one. I helped this one. Nobody's talking about bottom line and profitability or taxes or cash flow. And it's just created this belief, this ubiquitous belief that says, as long as I have a 6 or 7 figure top line business, I'm going to be rich. And I don't have to worry about money in any other aspect of money. As long as I build that 10, 20, $30,000 a month or $100,000 a month, fill in the blank, whatever that number is. The belief is, as long as I hit that number, all my money problems go away. And it's what's talked about and celebrated and promoted and endorsed and marketed and sold. And it's such a scam.
It is. And we have a saying, top line is vanity, bottom line is sanity, and cash flow is reality. And that is the other little dirty secret that nobody talks about. One of the number one reasons for failure and bankruptcy is growing too fast. They get ahead of their cash flow. And so they just think, I'll just sell more. I'll just sell more. I'll just sell more. That's what I hear business owners say all the time. Selling more might actually drive you to failure faster than anything.
Yeah. And again, it's just, it doesn't make sense if you don't understand how the basic financials work. And that's, I think, a responsibility of a business owner is if you want to be in business, you can't abdicate the money. You have to get in the books. You have to understand the basics of a profit and loss. You have to understand the basics of your balance sheet. You have to understand how cash flow looks different than profit looks on the books and understand the reasons why. Because if not, I didn't understand the difference early on and I got cash flow crunches. And that first company of mine went bankrupt because we grew too fast and we had a lot of promises we had to fulfill on. The economy changed a little bit, but there just wasn't the cash flow that could meet payroll. And I could only self-fund that for so long. And then I was out of money. So, again, I had to learn the hard way. You just this just intuitively made sense to you. But I was scratching my head like, wait, how did we have all those sales and we were just doubling month over month for about 18 months straight? And I can't make payroll. I can't pay myself. I keep putting my own money back in the company thinking any day now it's going to pay off. And ultimately we went bankrupt. So then it made sense once I got underneath and I'm like, okay. But when you don't know that, it's again, it's just these mythical beliefs that more sales means more revenue, and more revenue means that's the answer.
Nope, it's not. And that's the simplest way to put it.
Exactly. Well, let's we're bumping up against the top of the hour here. So I want to circle back really right back to where we started. And you talked about kind of really at the beginning of your days, you love these things called spreadsheets. And before spreadsheets were easy, even, and you were building these things. So it sounded like you had a love of spreadsheets. Even though I have an accounting and finance degree, I just did it because I thought that was the degree that was going to make me rich. Little did I know. But even with those degrees, I've hated spreadsheets. So I'm the person that really didn't like numbers and didn't like spreadsheets and didn't want to be in my books. I represent, I'd say, most of the population, but finally learned that, oh, I have to manage my own money personally. Oh, I have to manage the business money. Oh, I need to understand the basics of QuickBooks. I need to be able to be literate when it comes to business literacy is being able to read a profit and loss. And what I mean by read is be able to make an interpretation, to read it, make an interpretation and understand what it's saying. So the reason why I'm sharing that story is because I don't have a natural proclivity towards these things. I've just learned that if I want to be profitable and successful and rich, I'd better learn the basics. And then I can hire out the more skilled pieces of that, like to you, for example. My point of sharing that is whether you like spreadsheets like Rocky or whether you don't like spreadsheets like me, you have to have some form of spreadsheet that is the scoreboard that collects the data and learn how to read that data. Now I use QuickBooks and I use some spreadsheets attached that I use to manage all the data of my business between Google Sheets and QuickBooks. And that's what I do as a business owner to make sure I stay profitable. What do you recommend when it comes to spreadsheets? Are you using QuickBooks as well? What are you tracking data in spreadsheets? But yeah, what do you have to say about that? I think at the end of the day, we both agree that you have to know the data in your financial accounts that's reflected in a profit and loss and balance sheet. And you need to know other key data of your business. You can track that. So what are you tracking mostly?
So we actually look at things very differently. I look at every business as a math equation, and the beginning of the math equation is lead flow. And so we look at lead flow, conversion rates, average sale price, number of transactions, customer retention, all of that drives revenue. And then we look at revenue and then we look at all the expenses. What's your overhead? What's your cost of good? What's your labor? What's your marketing? So all of that comes off. And then that gives us our net profit. But the dirty secret is net profit doesn't equal cash. So then we go over to the balance sheet. And we start looking at what's your receivables, what's your payables, what's your inventory, right? How much money did you take out of the business? How much money did you borrow or spend? And on top of that, here's the other dirty little secret. When you make a loan payment, right, the only thing that hits your P&L is the interest portion. The capital payment on that loan ends up on the balance sheet. So I made $1,000 payment, only 200 of it hit my P&L, $800 disappeared, and I'm profitable, but I have no cash. It's because everything is happening on the balance sheet. Most people don't realize that the P&L is like one little line item on the balance sheet, and that the correct way to look at a balance sheet is to look at how it changes month to month. Even accountants don't look at balance sheet changes month to month because they aren't taught to do this. And it is that skill of being able to see how the balance sheet is changing, how to predict it, and how to improve it that is truly how you build wealth, because wealth is built on the balance sheet.
Wealth always exists on a balance sheet. So let's complete there because that is such a big statement. And for everybody listening, there's personal wealth, and your personal wealth is reflected on your personal balance sheet. So if you don't have a personal balance sheet and you're tracking it, you're probably not accumulating wealth, because anybody that's really after wealth is looking at that balance sheet and watching it grow. On the business side, as Rocky just said, the wealth of your business is reflected on the balance sheet, even kind of the line item that kind of reflects that in one way, which is called owner's equity, that really shows how wealthy the business is doing and how that's, growing over time. So how do people find you, Rocky? Again, like I could talk to you for hours. We could keep going deeper and deeper, but I just appreciate you so much, your wisdom so much. And I think what your voice is really important to get out to the world.
So everything I do, I teach on my podcast, Profit Answer Man. And you can find us wherever you're listening to this, or the website is profitcomesfirst.com. So either of those places, we share everything we do. So we're perfectly happy if you learn and do it yourself if you want. And that's perfectly cool.
That's another thing I love about you. All right, my friend, thank you so much. I appreciate you. We'll probably do a round 2 or round 3 at some point to keep drilling in deeper because like I said, so few people know what you just shared in this 60 minutes and we barely covered the surface. So thanks so much.
Thank you for having me.